Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a lot to cover on the show, but first, let's take a look at what's been happening in the markets. It's been an interesting week, with world stocks holding near record highs and oil prices pinned below $100 a barrel. The MSCI's World Share Index hit a record high on Thursday, rising 8.5% so far in April. This comes as diplomatic optimism, tech leadership, resilient first-quarter bank earnings, and a cooler-than-expected producer price index have all contributed to the market's climb. Now, some analysts are questioning whether this rally has gone too far, too fast. Ben Laidler, head of macro and equity strategy at Bradesco BBI, notes that investors are forward-looking and relative valuations look pretty good, with earnings remaining strong. He also points out that it's rare for geopolitical events to not be a buying opportunity. In other news, Uber has made its single biggest European food group buyout with Delivery Hero, according to the Financial Times. And Tesla is targeting Taiwan to hire chip experts for its Terafab, as reported by Reuters. We're also seeing some movement in individual stocks, with Netflix diving 10% in pre-market trading after disappointing shareholders with its second-quarter guidance and the announcement that co-founder Reed Hastings is stepping down from the board. On the other hand, Affirm stock jumped nearly 6% after Morgan Stanley named it a top stock pick. As we take a closer look at these stories and more, we'll be examining the potential risks and opportunities for investors. We'll talk to experts, analyze the data, and help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into two intriguing stories that caught my attention today. First up, we have Critical Metals, a company that's making waves in the rare earth market. With a strong buy consensus rating and a mean price objective of 17.5, indicating potential for a 35% rally from here, it's no wonder investors are taking notice. Texas Capital's recent $20 price target and the company's joint venture with Saudi conglomerate TQB have certainly added to the optimism surrounding Critical Metals. However, as we always say on this show, it's essential to approach any investment opportunity with a critical eye. While the prospects for Critical Metals look promising, we must consider the broader market context and potential risks involved. The rare earth market can be volatile, and investors should be prepared for fluctuations in demand and supply. Moving on to our second story, Beyond Meat has just launched a new beverage line, Beyond Immerse. This expansion into the functional beverage category marks a significant shift for the company as it looks to diversify its revenue streams beyond plant-based meats. The partnership with Big Geyser secures access to over 26,000 retail outlets in the New York metro area, which is undoubtedly a bullish sign for BYND shares. Yet, despite this promising development, caution is warranted when considering Beyond Meat stock. The company's cash burn rate and declining revenue in the latest reported quarter are concerns that cannot be ignored. Furthermore, with the stock trading well below $1, the threat of a Nasdaq delisting looms large. Insider activity, such as the recent sale of company shares by Chief of Finance Lubi Kutua, also raises questions about confidence in the company's future prospects. As we weigh these two stories, it's crucial to remember that every investment decision should be based on thorough research and a deep understanding of the market dynamics at play. Whether you're considering Critical Metals or Beyond Meat, it's essential to approach these opportunities with a balanced perspective, acknowledging both the potential upside and the risks involved. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to take a moment to discuss some of the key earnings reports that caught my attention this week. We've seen some impressive numbers from State Street Corporation and Badger Meter, two companies that have been making waves in their respective industries. State Street Corporation, for instance, reported record quarterly fee revenue and total revenue, driven by broad-based growth across investment management, servicing, and markets. Their One State Street strategy seems to be paying off, as they've successfully linked investment services and management platforms to enhance client-led solutions and platform value. With a raised net interest income growth outlook of 8% to 10%, it's clear that State Street is poised for continued success. On the other hand, Badger Meter reported some impressive numbers of its own, with a strong showing in their Q1 earnings call. Their Choice Matters strategy has allowed them to win RFPs and replace legacy fixed network systems with their cellular AMI technology. With a target range of 39% to 42% for gross margins, Badger Meter seems committed to maintaining a healthy operating profit profile. Now, I know some of you might be thinking, Lewis, what about the risks? Well, let me tell you, both companies have acknowledged potential challenges on the horizon. State Street mentioned concerns regarding credit quality in specific financial system segments and geopolitical tensions, while Badger Meter noted that large projects like PRASA may have lower gross margins. As we always say here on the Riskwiser Zone, it's essential to approach any investment with a critical eye and consider both the potential rewards and risks. While these companies have certainly shown promise, it's crucial to do your own research and consult with a financial advisor before making any decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.